Gentlemen, yes, thank you so much. I have been anticipating this conversation for some time, and I imagine everyone in the audience is equally excited. I can see the camera phones going up already, so no pressure. Reeve, I am going to start with you, if that's okay. Let's start by addressing the volatility that we are seeing in the market at the moment. What, for you, is it signaling? What does it signal? What kind of, stability, what kind of transparency, what kind of infrastructure that we need to reassure those who are buying in?
Well, it's a great question. And, I don't want to say today's volatility or the volatility that we're experiencing right now, because it's crypto. So volatility is the beauty of our market. It's also the pain. And we can look back over the 10 years and see the ups and the downs in the market and know that crypto has always weathered the storm. But what does that really mean? It means that the infrastructure below it, the companies that are being built, are really changing the way the world does business. We've got Mike right here who's invested in some of the best companies in the ecosystem, and Joe who's built some of the best companies in the ecosystem. And so what it really means is that innovation and that foresight and that ability to create technology that's going to change the way the world's financial plumbing actually operates, that's the longevity. So the volatility is just on the surface, but when that technology continues to perform in the way that it has, that's what gives the world trust to know that it might be down now, but eventually it'll be up and to the right.
Mike, with your decades of investment experience, your pedigree, given the mix that we're seeing at the moment of inflation pressures, of shifting rate expectations and geopolitical shocks, what signals matter to you most when it comes to choosing where to put your money?
It's a big question. Listen, from a macro perspective, markets go on long and big cycles. And the cycle is often determined by the central bank of the United States, right? The Fed. There's a big Fed meeting today, 2 o'clock New York time. The Fed will probably cut rates, and that'll send a signal to the whole world. And so we've got this big cycle. The reason crypto exists, really, is that Satoshi and then the followers of Satoshi sensed that things were getting carried away in this credit cycle perpetuated by the US and the West. And you had this 2008 financial crisis that was solved by jamming lots of liquidity into the system. And then you had a 2012 European crisis, which was solved by monetizing more assets. And each step of the way, central banks and ministries of finance, treasury departments, have monetized assets, have financed their way out of this gigantic, debt problem, and the debt problem gets bigger. And so we are close, a year, 2 years, 2 months, 6, you never know when these things end, to the crack, to when it breaks. And it's gonna break because in the West, we have inequality like we've never seen, right? I remember I gave a speech at the Milken Conference in 2009, and I said, when inequality gets this bad, it ends in revolution. Well, that was 2009, and now it's 2025, going on 26. 16 years later, and inequality's gotten worse every year. And so how does inequality break? It usually breaks with revolution. It can be a violent revolution or it can be a peaceful revolution. We just in New York City elected a mayor who some people call a socialist or a communist, who broadly is just pointing out that affordability in New York City and in most of America has gotten really difficult for most people. And so that's the big cycle we're all in. Crypto came and said, wait a minute. Bitcoin specifically started in saying, hey, if they're gonna monetize their way out of this, I want a place where I can store my hard-earned work, the fruits of my labor in a community that I trust. And so we created an alternative money, really. You can call it digital gold. It was originally alternative money. And lots of other crypto ecosystems have showed up for that purpose. And so in some ways, it's the breakdown of this credit bubble in the West that gave crypto its right to exist. And so that's the big picture. I mean, I don't want to talk too long. It's the big picture of how I see everything, and it's why crypto has gotten to here. Now, next time I'm around, I'll give you the next chapter.
Brilliant. We will. Well, we'll head into that, but I have to get Joseph involved in this conversation.
Yeah,
of course.
can I go even bigger picture?
Go
So
massive.
you ask a simple question: why is there the perception that there's greater volatility in the world? So we can answer that with some deep structural reasons. We can go back to 80 years ago. We can go back for millennia. If we think about the current super cycle, which I would argue is a debt and monetary super cycle or a generational super cycle in a Strauss and Howe generations theory context. It's essentially about the fact that America came out of World War II with the strongest military and industrial base and set the rules, monetary rules for the globe. There was, if we go back millennia, we've been operating under a certain kind of trust, a top-down command and control trust where authorities imbue intermediaries with authority and trust, and those intermediaries maintain ledgers of who owns what and who has what rights. And so that system of the world has been great for building civilization, but increasingly it's very complicated and even terrible for the people living in that civilization. And so we've seen the current super cycle run 80 years, and technology is so powerful, and disparity in wealth has grown because of the technology. And so there's a real loss of trust in the system by the people in the system. And essentially we need a new form of trust, a more powerful form of trust. And in 2008, 2009, Satoshi Nakamoto, the inventor of Bitcoin, invented something very profound, which is decentralized trust. Satoshi also showed us how to operationalize decentralized trust on a peer-to-peer network of independent actors that can process transactions. And so in the Ethereum ecosystem with the Ethereum technology, we took that insight and we enabled the application of decentralized trust to basically everything that you can imagine writing software for. And so the idea is that we have a new trust foundation for the planet. For the last 10 years of nonstop uptime in the Ethereum ecosystem, we've scaled it and we built decentralized finance at a second layer. And now we can move into different sectors of the economy. We can disintermediate certain intermediaries that have rent-seeking behavior. Intermediation is actually really good in a lot of ways if you add information, add value, reduce frictions. And so we now have this new trust foundation on which we can re-architect the world on sounder principles.
Just a quick follow-up question on that. What would you say are the strongest signals that the sort of underlying infrastructure for the sector is becoming more reliable, is becoming something that more people can place their trust on?
Yeah. So we have spent 10 plus years building this new kind of infrastructure for the planet, this new kind of decentralized cloud on which to run all of our applications. It is now scalable enough. It's scalable horizontally, meaning we can add lots of networks, we can add better technology, better hardware, vertically. So just like the internet, which can scale infinitely, now the Ethereum ecosystem and related ecosystems can scale infinitely to grow with the world. It's now affordable. It's very cheap. Block space is cheap. Transactions are cheap. It's getting very, very usable. And as we add artificial intelligence user interfaces to our wallets and to our applications, it's going to get very delightful to use. And AI is going to enable us all to level up in tremendous ways. And AI is going to heavily run paying agents with tokens and run on decentralized infrastructure. And most importantly, it's hard to build an infrastructure, a civilization scale infrastructure on a totally different organizing principle in a world based on essentially the opposite organizing principle, which is top-down command and control. And so for years, we've built enabling infrastructure, and now we, instead of governments like the US trying to kill us or slow us down, we now have the wind at our back. And so whether it's legislation or the stable coin phenomenon, whether it's freeing organizations to use tokens, issue tokens, use DeFi, or bring in the best and the brightest builders into our ecosystem, we are surging.
Let me hop on that for 1 second, because I think 2026 is a really important year. Crypto has been a story. It's been a story of what's coming and why we're such an important industry. And Joe's done an amazing job of giving the history of that story of why it existed. But practically, very few people, certainly in the West, in the United States, have an app on their phone where they use crypto. They don't have decentralized ticketing yet or decentralized finance yet in a practical way. Part of that is because it took a while for blockchains to get fast enough, scalable enough, and trusted enough to be used, and we're at that point. And a big part of it was because US legislation, which I know this sounds like an American-centric view of the world, but US GDP is the dominant GDP. It's 65% of a global market cap. And when US legislation doesn't work for an industry, it is very difficult for that industry to thrive. And with the new administration, there's a bipartisan view now that we need to pass crypto legislation. And so we've got the Genius Act passed. I would hope in the next 6 weeks, the market structure bill passes, which is going to allow companies to feel more comfortable participating. And so you're going to see every TradeFi institution join this digital revolution, right? This blockchain revolution. In 5 years' time, we won't talk about crypto and TradeFi. It'll just be markets. And so we're in this transition. It will create volatility because some of the stories that we told that were just stories, now those stories have to deliver. Right? I tell people, when I talk to crypto audience all the time, I was like, dudes, it's time for us to build something we all can be proud of, where the average citizen uses it. It's my strongly held belief that the first generation of crypto, that what's coming next, will be more important to the rest of the world than it will be to the Western economies, right? The payment system in America is pretty good. If I want to buy a stock, I can buy a stock. And so it'll be distribution, simple things like distribution of tokenized equities to people in Paraguay, in Cambodia, in Africa, in the Mideast, places where it's more difficult to get access. You can see the stablecoin phenomena exactly as what happened. But this will be the golden era of actual, crypto adoption, of digital asset permeating, around the globe, or it certainly should be.
Yeah, Reeve, I want to pull you in there as our expert on stablecoin. It is considered the sort of bridge between traditional finance and digital assets. Perhaps you could talk me through the real world cases that are gaining the most traction for stablecoin.
Yeah, well, still today, the majority of transactions are within the cryptocurrency ecosystem.
Okay.
Because for trading, but that's expanding. And as Mike mentioned, it's the rest of the world that feels the pain of poor financial services or highly volatile currencies. So they're leaning into a digital dollar and leaning into improved banking services that stable coins can offer. And so those are going to be the next use cases, is more and more of these other countries leaning in deeper. And just yesterday, I was at an event and two gentlemen from Ukraine came up to me and they're like, "Oh, I heard you're the co-founder of Tether. It's so nice to meet you." And they're like, "You guys, you don't understand the impact it has had, especially during the Ukrainian war. We get to send money to our friends. It's not just some soldiers over there. These guys are their friends on the front line." And that actually just gave me goosebumps just to see that the industry that we're all in is truly having an impact, especially stable coins. And as we advance, the next step, now that the regulatory landscape has shifted, and as they've shared, the traditional institutions are lining up to dive in. Well, why is that? First of all, stablecoin will be the bridge. So stablecoin businesses and infrastructure really is going to be the narrative for the next few years, because it's not going to be stablecoins. It's just cash. It's just fiat. It's just money that runs on a different infrastructure. And soon it won't be a stablecoin that you see in your wallet. It will be USD or whatever your local currency is. And on the back end, it will run on an improved infrastructure, some sort of blockchain technology that's been integrated in that bank. And so it will just be finance that's greatly improved. And that's why all the money from traditional finance is sitting on the sideline. People ask how much money will flow into stablecoins. All of it, because stablecoins aren't stablecoins. They are just money moved in a more efficient way. And that's why it will all flow in, because it's a great improvement that includes the rest of the world, the people that were left outside of banking infrastructure in the past. So that's the future that I see.
Gentlemen, do you agree that all the money will flow?
I would argue that stable coins will be a foundational element of the new monetary system. There are a lot of banks out there that are very concerned that they're going to lose the bulk of their deposits because there is this new instrument that can be used as cash. In some cases, even consumers are going to be able to get something that looks like yield for even holding the stablecoin. If there are other ways to get yield too, you can package up yielding instruments into a money market fund, and you can actually put your money into a tokenized money market fund and then flip some of that into a stable coin in order to pay for your night out or something like that. We have at our company Consensus, we publish the MetaMask wallet. We have our own stable coin, and most companies are going to have their own stable coin. It's going to be a revolution in e-commerce essentially, because whether it's a stable coin or a white labeled debit card, or even a tokenized equity, companies are going to have direct access to the holders of those particular instruments, which is different in some cases now. In our wallet, whether it's the stable coin or whether it's a debit card, our users are able to, instead of taking their salary, taking their monthly paycheck and sending it to their bank so they can use their debit card, and the bank earns interest on their backs for that entire month. We're building a payroll system that enables people to simply deposit their salary tokenized in stable coins or in other tokens, and earn money in decentralized finance right from the start of the month and up until the moment that you do go out and you use your debit card to purchase some things in real time. That money will be pulled from decentralized finance, will stop yielding, and it's not all of it, it's just whatever you're paying for in real time. You convert to stable coins and on the debit card, and you're paying instantly essentially for whatever you need. It runs on the global MasterCard network, and essentially we've managed to close the loop so that people can essentially live their lives with this new monetary system. And
I mean, Mike, you mentioned that the shifts that are going to come in 2026, the changes, but there is still a lot of capital sitting on the sidelines. What do you think it will take for institutional investors to start moving their money into the sector, and where do you think those capital flows might come from?
So it's interesting to think about, like, what is an institutional investor even, right? Like, if you think of Galaxy is a $10 billion company that deals with institutions, right? So we set ourselves up to be this, we called ourselves the bridge between crypto people and institutions. And what we've seen, the idea of what an institution is slowly evolve, right? We originally had some venture capital firms that were ahead of the curve. They were the institutions that got in. And then they were the big trading shops like DRW and Jump Capital that were arbitrageurs that were providing liquidity. Like, those are big institutions, and they got in. Now we have Larry Fink at BlackRock, who started this ETF revolution, or actually maybe it didn't start it, but certainly accelerated the ETF revolution. And that has brought tons of institutions in. So hedge funds are participating. Sovereign wealth funds are participating. the more important shift, which is starting to happen now, is that every single financial institution on the planet is preparing themselves for a world of tokenized assets. When I say every single one, I mean every single one, from the biggest to the smallest banks. And so, mark my words, 6 months after this market structure bill passes, you will see the Goldman Sachs's and the Citibanks. We're already seeing Bank of America talking about it, JP Morgan talking about it, providing services for digital assets, for Bitcoin, but also for all digital assets. And there's an old adage on Wall Street, right? Wall Street is a selling machine. It's not a buying machine. It's a selling machine. It's this giant apparatus to sell financial products to its customers. And so hold that thought and think about this giant group of financial institutions that are going to start being part of the selling machine. And so there is a wave coming where not just Consensus and Galaxy and Coinbase and the crypto guys are touting the merits of this new revolutionary shift, but every old financial institution is going to be part of that team. And so, again, I don't know if it's mid-26 or 2027, but we're at the starting point, really. Like, I told my team when we went public, it feels like we just finished a marathon. We actually just hit the starting line. And as an industry, this is the starting line. And so would it surprise me if it takes to 2027 for it to get going? No. Things sometimes take longer, but it's impossible not to feel the energy at all these places picking up.
Yeah, so we have hit the starting line, and the race is going to go very, very fast. We are seeing banks panicking because of stablecoins. Legislation in the U.S. that's in place and legislation that is coming into place is going to change the nature, and the SEC itself will be changing the nature of the securities industry. So we're seeing organizations like SWIFT reach out to us to help them build the SWIFT ledger. They did that because they're panicking. They did that because stablecoins are going to change the nature of banking. The big banks are going to be fine. They're really good at adjusting to things, but local, regional banks, they were panicking. And so we have some solutions for them. We believe that they aren't going to need to custody everybody's assets in order to handhold their customers and to earn money from that. We believe the nature of identity is shifting in the world. And so institution like a bank can be a data fiduciary, an identity fiduciary. We're seeing organizations like DTCC, Euroclear, Clearstream, and stock exchanges around the world getting very serious about tokenizing equity. I know somebody who tokenized his own equity, sitting right next to me. So whether it's payment versus payment or delivery of instruments, financial instruments versus payment, I think in the next 2 years, we're going to see the financial industry totally reformat itself.
It's a very rosy picture for those of you in the sector. I've got to ask, hurdles, hiccups, what could stall things? I mean, it doesn't feel like that long. I know we're talking about the foundational elements of this, but it doesn't feel like that long since the crypto winter.
Well, listen, I mean, all this bullishness and overall crypto prices are down pretty big on the year. So how does that make sense?
Yeah.
Right? We are in this transition, right? There was a lot of excitement coming in with the Trump administration that pushed crypto prices out. And there's a real transition, I said this before, of the story of what could happen and it actually happening. And so lots of ecosystems were a version of Bitcoin. They were community-based places where people said, I trust in this ecosystem because I don't trust other places. And the ecosystems that actually start providing value, the blockchains that are built on and used, will continue to have narrative and story to bring people into those spaces, and the other ones are fading away. And so we've probably seen 75% of crypto assets this year lower in price, not higher in price. And so when I say it's going to be a confusing 18 months, the underlying momentum of an industry is going to be disconnected to a degree from price of what people always perceive to be the assets of that industry, right? Stable coins, if they do their job, they don't move off of one, you know? So you don't buy a stable coin to make money. You buy a stable coin for utility, to use it to pay for things. Those stable coins often run on blockchains, or they go through wallets. And so there are lots of businesses that will profit and make money from the proliferation of crypto, but it might not be the token you were used to holding.
Okay.
And so investing in this space is trickier now than it was even in the beginning, because in the beginning it was all correlated to each other. It was this broad story of crypto, and it was a powerful story because it was ringing true. Crypto was the first global market mania. It was the first global asset. You remember, US stocks were US stocks, or Japanese bonds. They were localized markets, right? Crypto is a truly international market. Joe told me early that MetaMask has people from 200 countries. And I only thought there were 196 countries, so he found 4, right? Like in every part of the world, people are participating in this industry. And it's funny because we're all here in Abu Dhabi and we've flown around in the world to be here. So we're globalists by definition. Most people aren't. And so most people are local. And this is really a global industry.
Joseph, I'm going to come to you in a minute, but I'm aware we've got 4 minutes left. So I just want to get Reeve's response to this idea that, you know, maybe the industry is underestimating the challenge, shall we say, of scaling responsibility. And then I'll come to Joseph. We need to be good about our timings, otherwise they'll get very angry with me at the back.
It is our job to underestimate the challenge of scalability, because if we didn't, we wouldn't do it. So all of us in the crypto industry have to be bullish. We have to believe. We are entrepreneurs. We are builders at heart. The whole goal, we've been in this for 10 years plus, when the whole world was against us, and just fought every step of the way through every rise and every fall of crypto. And so the volatility has always been there. It's always going to continue. But the technology itself has proven itself over and over. And finally, the large institutions are recognizing that, and that money is going to pour in here and make this last decade of laying the foundation all worthwhile.
Okay, I have to say, I mean, it's wonderful to hear the sort of the positivity, and you're backing it up with such solid arguments. Joseph, you know, for years you have basically framed blockchain as the foundation for new digital economies. You know, which pieces of that vision for you feel closest to reality as we head towards 2030?
Well, I'm a systems thinker, and I think the paradigm shift is underway and it's accelerating. So if you look at where we are, as I discussed earlier, we're at the end of a super cycle, an 80-year super cycle. The next super cycle will be composed of AI and crypto and decentralized protocols. Our ecosystem gets a bad rap because we're this little baby technology ecosystem in a big bad economy that thought it ruled the world, and it does. It did, and it still does. But things are shifting. One of the knocks on our ecosystem is that we're too volatile. So we're too volatile because we're a baby ecosystem. When the big dog economy sneezes, the tail, the little tail that represents us, it whiplashes all around. And so we've seen that recently. We've seen that so many times in our history. But we're at this moment where the paradigm shift is on to greater decentralization, and all the capital is moving in our direction. Traditional finance is onboarding itself to DeFi in the form of digital asset treasury companies, in the form of stablecoins, in the form of tokenized equities, and so many other forms. And so, as I said before, it's on. The pace of transformation is going to be pretty shocking to a lot of people.
Amazing stuff. It's been an absolute privilege to share the stage with all three of you. Thank you very much indeed. I'm sure everyone in the audience will want to join us in a round of applause for what has been a truly fascinating conversation.